Hello and welcome to the look ahead for Wednesday, the 6th of November with me, Fiona Cincotta, Senior Market Analyst at City Index. Well, the main focus today is obviously on the results of the US election. Now, as I'm recording this, Donald Trump is in the lead with 248 electoral votes to 214 for Harris. Now, it hasn't actually been called yet, although we are at the stage where Trump seems to be very much in a celebratory mood, and the Harris camp is not responding to media questions. So there does seem to be a sensation that Trump has won, and the markets are reflecting that. So let's just jump straight in and have a look at what is going on. Here I've got the Euro US dollar up. Look at that. We can see, I mean, as we're seeing sort of the likelihood of Trump taking the White House come in, the US dollar has surged, and basically most other currencies have absolutely dropped. So we can see this aggressive breakthrough of resistance, of support at 108 on the Euro US dollar, taking out the 200 SMA, massive bearish engulfing candle, made it all the way down to a low of 107. We've just come up slightly from that 107 level, but overall, you know, we've taken out that 200 SMA, we've taken out the 108, and we've also taken out the support of this rising trend line, which dates back to the end of last year. So, you know, quite a negative picture. And this is basically over concerns. Well, we've got a couple of things going on here. You've got the fact that that Trump's policies are considered to be inflationary, his tax policies, his tariff policies, immigration policies, all expected to be inflationary, meaning that the Federal Reserve will be unlikely to cut as aggressively as initially expected. That's boosted the US dollar. We've seen the US dollar has risen to a 4-month high against its major peers. We've also seen US Treasury yields on the 10-year reach a 4-month high as well. And also there are concerns with the euro, similar, not quite as bad as with China, but that there could be some trade tariffs with the Eurozone and the European Union, which could hurt a very fragile recovery that we're already seeing in the Eurozone economy. Just as far as data is concerned, there are a couple of data points from the Eurozone today. You've got PPI, which is expected to fall by 0.6% month on month. And you've also got the composite PMI, although it's the secondary reading, so it doesn't tend to be as market moving. But I think it's fair to say that the main driver is going to be the results from the US election. So levels to be watching out for. I mean, on the downside, sellers, you've got this bearish engulfing candle. You've got sort of several key levels that have been taken out. We're seeing that the RSI is below 50. Sellers going to look to take out that 107 level, which is then going to bring in 106.70, which is the low from June. Any recovery needs to get above 108. That's where you've got this the line in the sand, really. You've also got this rising trend line there. Okay, 107.75, 108 region, in order to push then higher above the 200 SMA at 108.70. Just let's have a quick look at what's going on with the pound US dollar. Again, we've seen the move. We've seen that sort of selling off in cable, not as aggressive yet as what we've seen in the Euro US dollar. I mean, broadly speaking, you know, the pound is expected to hold up a little bit better, maybe not so much in the firing line. As far as sort of trade tariffs can be concerned, particularly to do with sort of, you know, Germany, cars, etc. But yeah, support, what we're looking at here, so we've broken, you know, very firmly through 130, back down 130, through that rising trend line support. Obviously, we've got the Bank of England tomorrow, so we might see some positioning around that. The Bank of England is expected to cut rates by 25 basis points, testing this key support here at 128.50. That was a level that we saw tested at the end of October, and then below that you got 108.20, which is the 200 SMA. Again, a fairly strong bearish engulfing candle. RSI below 50. So these are all sort of fairly bearish signals that we're seeing on this chart. Just finishing off on the currencies with a look at USD, Japanese yen. Okay, again, we've seen a fairly aggressive move higher in the US dollar, Japanese yen. This is the strengthening of the US dollar that we're seeing. It's recovered from the 200 SMA there at the 151.50 level, taken out the support, the resistance here, which is the 61.8% fib level. Around the 153.20, I think it was. And then we're heading towards the 155. That's the next level to be watching on the upside. Interesting here, we did have the minutes from the Bank of Japan meeting come in overnight. And they were actually relatively hawkish in the sense that we saw a sense that the Bank of Japan wants to continue hiking interest rates as and when the data supports. One member also suggested that rates could be hiked even by as much as up to 1%, so reaching 1% in the first half of 2025. Currently, rates are just at 0.25%, so that does imply that they're could be a fairly aggressive, but as I said, that was just one member. But anyway, the yen is failing to find support from that. The fact that we're seeing this push higher, if we see much for a rise further, then there are obviously then concerns over intervention from Japanese authorities. As I said, levels to be watching out for: 155 on the upside, and then 157. And then we've got on the downside, you've got the support there at the 151.50, which is the 200 SMA, and then the 100 SMA around the 150 round number. Let's just have a look what's going on as far as stocks in the US are concerned. S&P 500 heading to fresh record highs, hitting fresh record highs as we speak. So we can see we've seen a rebound from the 50 SMA that was reached earlier in the week, taken out this level here of the 57.75 resistance, now testing fresh all-time highs. On the S&P 500, as I said, Trump's policies are expected to be deregulatory, so particularly banks are expected to do well. Fossil fuels are also expected to do well. So this is what we're sort of expecting to see: deregulation, policies pro-business, which is helping the S&P reach those record highs. Above here, 59,000, 58.50 would be looking at next. 5,900 is almost there. 59.50 on towards 6,000. Support on the downside, the 57.75. Just let's do a quick comparison with what's going on in Germany. In contrast, really, because obviously we've seen that that record high in Germany. We are actually seeing some move higher in Europe, which is quite interesting. Obviously, it's nothing in comparison to what we've seen in the US. No record highs there, but obviously that's a sense that that there aren't as many concerns as initially expected with regards to Trump and policies that could be detrimental to Europe. So we're seeing that more played out in the FX market than we are in the stock market. So as far as levels to be watching, we've pushed above this 19,300 level, which was the low, and we're pushing on towards next level on the upside will be the all-time highs around the 9,000, just below 9,700, so 9,670. That's the all-time high that we'll be looking for. If we just have a look at that candle here, we've got that long lower wick on the candle, which suggests that there was little demand at those lower levels. So pushed above there, but on the downside, support I was going to say is at the 50 SMA, which is just above the 19,000. So I hope you like everything that you've seen, and if you do, then please do give this video a like, and for more videos like this, please do subscribe.